Since you clicked that thumbnail, that means you have a burning desire to know what the Phoenix metro real estate market area is doing currently. We're going to look back at January's numbers, February's numbers, and as far into the future as humanly possible without a crystal ball. We also have some exciting news and twists and turns with how the market is moving forward as we get closer to a presidential election. You don't want to miss any of this information. Please click subscribe, like, and leave us a comment. That truly helps our channel grow. Okay, let's dive right into it. Let's start off with new listings. This month, 6,122. Last month, 8,340. And last year, 7,107. So you can see that we're down from last year and last month. So the logical question is, why are new listings decreasing? And the answer is rather simple. Both buyers and sellers are in a holding pattern. Sellers do not want to prepare their properties for the market, knowing that buyers are on the fence when it comes to interest rates. They need to know what their payments are going to be, and at this point, they're higher than they probably like. I understand that. Who wants to spend more money when you don't need to? So, inventory will build, and you'll see why. Up next, we have active listings, and as the saying goes, numbers never lie, and as predicted, active listings are starting to stockpile. This month, just under 20,000. Last month, 15,600, and last year, 15,539. So as we can see, listings or homes on the market are starting to pile up. And the reason for this is just like we mentioned. As buyers don't continue to purchase properties as quick as sellers put them on the market, inventory will start to rise. Remember, not everyone can time the market. In a perfect world, you will sell when the market is ideal, maximum dollars, and you'll buy your property when interest rates are at their lowest and inventory is at its highest, but that's not always the case. So sellers, some, will continue to put their homes on the market, but what we're seeing is that buyers aren't purchasing quite as fast, and again, I believe that's due to interest rates, so inventory will start to build up. That doesn't mean that homes aren't being sold. It just means we're starting to add inventory to the market, and you'll see that reflected in statistics a bit down the road, or down the video, or in this video. Next up, we have one of my personal favorites, closed listings, the true indicator of what's actually being sold in the Valley of the Sun. In February, there was 5,650. January, there was just over 3,900, and last year, there was about 5,400, give or take. So, a strong indication, or an indication, that properties are still being sold. However, interest rates still loom heavy over what buyers are going to pull the trigger on again, and when sellers will feel it's the right time to put our for sale sign in their front yard. The reason why closed listings is one of my personal favorites is it actually gives me true data, what actually has happened. A property has sold. We can see the numbers based on the size, shape, location, etc. of said property. Properties that are listed for sale or perhaps under contract aren't quite across the finish line yet, so there's still a bit of an anomaly. We don't know that they're actually going to produce the numbers that the contract was written on. Although the contracts are solid, that's why we put everything in writing. We don't know what the actual figure for those houses are until they are closed. And that's why I like to use closed data as well as other facts and figures when I come up with a price to list somebody's house for sale, or perhaps equally or more important, when a buyer wants to submit an offer on a property, we want to make sure that we have accurate figures. Great, how many houses in and around the area may let us know how strong we have to come in with our offer, but seeing what properties have sold in that area, again, like properties, will give us another beacon of facts to be able to confidently submit that offer, knowing what actually has sold in that area. Okay, so the last statistic, closed listings, was one of my personal favorites, but far and away, this next one is the crowd favorite. Both buyers and sellers focus in on these numbers like a laser, and we can understand why. Average sales price. In February, we were just under 579,000. January, 568,000. 97 plus or minus, and last year just over 528,000. Let's talk a bit more about average sales price. Well, price is important for both buyers and sellers. We really want to make sure whichever side of the coin you're on, you price accordingly when selling your property. Also, when buying a property, you have to take in the big picture. I totally understand a buyer wants to get the best bang for his buck, close on their terms, and perhaps get as many repairs as possible so they're not making multiple trips to Home Depot, Lowe's, Ace Hardware, any of the great stores out there that provide housing equipment and material. But you don't want to miss the boat on what might be your forever home. Payments are going to be payments, and sooner or later, if the interest rates fall, you can refinance. If they hold where they are, well, you'll get used to making those payments as painful as they are, but in time you will build equity, like somebody that has purchased a home a year ago at the average sales price or 6 months ago. I think you understand how the math works and how you can start building wealth through acquiring property. There's nothing wrong with renting or perhaps staying with your parents, but both of those have their, well, disadvantages. Not putting either of them down. Renting is a great option for some, and stay with mom or dad as long as you can. They probably cook delicious food and maybe even help you fold your laundry. But the point is, sooner or later, you're going to want to have a home of your own because that's one of the best ways to build wealth. So don't always count on the prices to fluctuate to hold you back making a move. My opinion, let's talk. Let's see where you are with the market currently, and if the numbers match, let's get you moving. Next up, sold to list ratio. This is an easy one to remember, for me at least, because over the last 12 months, they've hovered right around 97%, just over actually. So that's a good thing. Stable market. When we put a house for sale, what that means is 97 plus or minus percent of the time we do sell it. That's a good thing if you want to have your house sold. Otherwise, why would you put it up for sale? Month's supply of inventory. This is another one of my favorites. Actually, most of these statistics are all my favorites because I love real estate and the numbers help me determine the best path for our clients. But when it comes to inventory, it's as simple as supply and demand. I'd like to think that a healthy inventory is somewhere between 2 and 4 months, mean average 3 months. And ironically, in February, we were right at 3 months. The month prior, January, 4 months. So we're down from last month. However, last year, we actually were at 2.5 months of inventory, which is again not a bad place to be. Somewhere between 2 and 4 months is solid. When we go over or under those parameters, that's when we see traditionally prices diving or skyrocketing based on what's left on the proverbial shelves. As I mentioned in my intro, we have exciting news for you. You see that QR code on the screen? Take a picture of it. Download our new mobile app. It's amazing. First off, unlike most third-party real estate sites, our inventory is current and accurate. Second, we don't gather, sell, or share any of your personal information. Don't want it? It's yours. And third, nobody is going to bother you. You know how it goes when you click on a property on any of those other sites and out of nowhere, agents and lenders are hammering your phone. Kind of annoying when you just want to shop for homes in private. If you want to talk about a property or ask questions about properties, all you have to do is click the chat button and there we are. Give it a try. Please leave us feedback. Give us a 5-star on that, and by all means share it. It is truly state-of-the-art, private, accurate, and all about helping you. Last but certainly not least, days on market. February saw 69, January 68, and last year 81. Let's talk a bit more about days on market. Although DOM, days on market, is an actual number, and we can use that number to see how long a property was for sale, don't always bank on the fact that it was a reflection of the condition or pricing of that property. Let me give you a quick example. If a home goes for sale today and 10 days later it goes under contract, the buyer typically needs 30 plus days to close. So if, in fact, they get to the end of that 30 days to close, sometimes they need an extension. Let's say another 30 days, and somewhere in there, the home could fall out of escrow. In other words, the buyers couldn't complete the transaction to purchase the property. The home will then go back on the market, but the DOM, days on market, does not always start back to zero. So new potential buyers would view that number and say, wow, that house has been sitting on the market for X days. I wonder what's wrong with it. Truly, nothing could be wrong with it. You'll have all the opportunity in the world to make or have an inspection or make an offer that you feel is fit. But the reason why the house had been sitting on the market may be, again, because the buyer couldn't fulfill or complete the transaction, giving the house, well, a bad name. I hope you enjoyed this Phoenix Real Estate Metro Area Market Update video. If you did, make sure you watch this one. I'll see you over there. Take care, and God bless America.